Trade. With me, I have Jay Trader. Um, he runs Small Cap Room. Awesome guy. Jay, how are you doing today?
Good morning, Chris. Good morning, everybody. So I'm over here at the Trader Academy, Italy. Thank you, Chris. Was a good day this morning, but I would say we have the market still waiting for the FOMC 2 o'clock p.m. today.
Hmm.
We're having some gappers this morning. We had Coin, which was up on the news over here. We had also Target, TGT, which was up on the earnings. And what we've seen in this market, especially in a lot of earnings, is that market simply likes to sell the new scenario. So first of all, over here, I would really like to go 1 second over Coin. So Coin this morning is getting approval for crypto futures platform. So what we've seen in Coin is that essentially this is the last over here month and a half since mid-July. Every single time that we have a news, you can see all these bounces over here, all these gaps. It tends to sell the news. So we have often what we call the sell the news scenario. And this morning, again, the same. So you can see over here in the chart on the left, we start having a pre-market news over here very early around 6 o'clock. Generally, those news in pre-market and big caps will be, I would say, around 5 to 8 a.m. New York time. We had over here a level of 84.50. Plan this morning, being that we have these weeks, the market is just like selling off on the gap up plays, was to sell the new scenario. Open 9:30 over here. You can see that it started like bouncing above 82.50, right away slamming down. And every single time you can see that we touch those levels of J-lines over here, we had a sell off. 82, more 81 and 50. And the target we give this morning, posted the room timestamps, 7:40 New York time, we posted that. We said we're looking for the target 78. And now we're almost getting to the 78. So sell the new scenario is one of the patterns that we love to trade the most in this market.
So Jay, let me ask you a few questions, right? I mean, this is coming from we all hear the sell the news all the time, right? So what would then constitute? Like, this had a pretty good move in the pre-market session. I think it opened up and just hit the scanners, right? It's like, when would you change your bias to this not being a sell the news? Maybe it's going to have a day one push, maybe a day two push, and then maybe it then sells off. So like, how would you frame your mind to make sure that you are not over biased in one way?
Okay. So the most important level is the what? Is the open level. So if we have that open level that is absolutely strong, then of course we're going to try and look for this for alongside. So on the example over here of Coin, looking at this stock over here, this is the 930 over here. And you can see that once we hit the 930, we simply like start spiking and rejecting. And then 15 minutes later, 20 minutes later, 950, we're trying to go from red to green at this level. Again, we're rejecting. So I always suggest traders to trace horizontal line over here, or simply have your rectangle. And this is the level over here, the open. And once over here we open and we start curling, then I can start looking for a long. In this case, I'm start looking at the order flow a lot. I'm start looking if we have bars coming in. I'm also looking at these supports over here, now resistance, but these supports, if we start having absorption. So if we have absorption, we have no more selling pressure. We start seeing like more grinders over here, buyers stepping in. Then I'm looking for this target over here, the first target 84.50. And then I'm looking for the next whole round dollar number. And then I'm looking for the subsequent, eventually higher resistance. But this market, as we can see, if you look at SPY, Q, ZS, and all of this, is not a market that is giving any of these setups. So it's a very conservative market. We have a bearish SPY, bearish Qs, bearish NQ, bearish ZS in the last weeks. So we can see over here on an hourly chart, the downtrending channel that we're having over here. So we put over here we can put even a trend line. And we start looking over here at this trend in the last 2 weeks. We simply see what? We simply see that we hit highs, and every single time on the highs over here, we reject. So looking at these highs over here, dips, lower high, lower low, lower high, lower low, lower high. And now following this concept over here of this bearish trending channel or down channel over here, we're probably going to hit over here 438. And the reason why we're selling a lot of these gappers like Target this morning, TGT, is for this downtrend. We're not in a short-term trend bullish. We have a short-term trend on SPY and Q, ES, Qs, which is totally bearish.
I think that's you touched up on so many things right there that are so valuable. From, I mean, for me, every time that even I've looked in the past, I've taken trades. I mean, there are some ninjas out there, right, that can trade the opening minutes, that have, oh, this is going to sell off in the first minute, and they can catch that first move. I've always seen how much more consistent the first retest of that red to green line is. So much, it has such a tighter stop, right? So for those that may not have that type of bias, or may not be that strong in their idea, I mean, just waiting 15, 20 minutes, waiting for it to sell off and give you an opportunity to get in, that's awesome. And the other thing that sounds really really important that many people miss, especially new traders coming in, is they'll look at a trade and say, I'm looking at intraday right now for my entire plan. When you're here talking about a long-term trend, you're talking about a short-term trend on SPY. You're talking about context. You're talking about the market right now is behaving in a certain way. I want my expectations to match what the overall market is doing, especially on large caps. So I think those are a few lessons that, I mean, that can save a lot of time in a new trader or any trader's learning curve, right?
I'm trying to condense, we don't have over here a lesson of 2-3 hours. I'm trying to condense essentially in about few minutes over here what the market is giving us. So what are the opportunities we trade? TGT this morning is not something that personally trade. August is my sabbatical month. So I'm just helping traders, mentoring traders, explaining traders what the setups are, explain the order flow, the tape, and we're trading these together, and I'm guiding them. But this is another example of a news this morning. We can see over here, TGT Q2 2023 earnings call transcript. And everybody, I was seeing this even on, Bloomberg this morning, CNBC, they were calling, wow, this is beautiful. They were saying like the Q2, and I would say it's better than expectation. That's the reason why I gapped up, despite, that this downtrend is having since months. And look what happened. All this big FOMO that they created on the news, right? And look what happened. Boom, another sell the news scenarios. So first of all, traders really look at the price action, understand these patterns and track them, because only if you're able to track the patterns, so you have your Excel sheet, you start every single day looking, okay, we have an earnings, how that played out. And over here again, this 930, we don't hold over here any kind of support, we simply break. And after this break, we start having a rejection. So again, the first thing you have to do at 930, put over here your line. This is the open level 9 over here. Okay, actually, is this level over here, 930. You can see that we break down, right away retest over here the J-lines again. So we don't even get over here to the possibility to go from red to green, and we simply start rejecting. Again, another sell the new scenario. And where I think this will go, probably it's going to go 125, unless some crazy SC13, like some institutional purchase over here. I don't really see how this could go like 140 or 145 again. So sell the new scenarios for earnings plays, but not only earnings, a lot of news, like we saw in coin, could be an upgrade, could be some kind of I would say contract agreement, okay, or alliances agreement.
Yeah, that's awesome. I know that earlier today I talked about wanting to look at a few other tickers like Tesla, Amazon, Microsoft. So what do you see on those going on right now?
All right. Are you familiar with Evening Star?
Evening Star? No, I'm not.
Okay, let's look over here this pattern. So we're looking at the monthly chart. Okay, Tesla 1 month, but we could see Tesla. We could see, for example, Netflix. We could see, for example, many others. And right now, so what we're going to look over here, right now, what we see that we had this major bullish candle, so bullish Arami over here. We had this major reversal, doji, and now over here, this bar, okay, which is possible going to form a bearish over here, Arami. So we are in, I would say, the possible formation of an evening star. Where is the target of this evening star? Ideally, we can look for this support of the trend line on the monthly 364. And if you look at a Tesla, same exact scenario. So we have over here what? We have in a major bullish over here candle. Over here, we have a spinning top. In this case, you can see that we have a major spike, close over here. And now if we look over here for a target on this fail, because in the short-term trend over here, we're like simply bearish, we're going to look for 200, 205. This level over here. Much better over here is looking at the momentum on our intraday time frame. Let's look, for example, now 15-minute chart. There we go. So this is a 15-minute chart. And we can see that since the last weeks, Tesla is simply selling off, creating these lower highs, lower lows, major breakdown over here, 250. This was an important level. Once we broke this level over here, 250, we continue to start rejecting those levels. You can see over here, 250 became from the demand zone over here, became a supply area. We start rejecting. And now every single time the price, like a magnet, is going to this J-lens level, you can see us getting sell off. Even this morning, when we are pushing, we still had over here a bias short because on the longer time frame, evening star formation with confluence of multiple time frames. This is a concept that I really like in trading. We have monthly, daily, hourly, 15 minutes, 5 minutes, 1 minute aligned for the short side. So totally bearish on this move. Now we're going to see how this reacts at 2 o'clock with our FOMC. But again, a lot of participants in the market are on holidays, especially in Europe. So even if the markets are open, we have a lot of big traders firms that are like on holidays till September. So I don't believe a big move with our FOMC, not something like we had in March or April, for example. And I'm looking over here for the test of 226 and then more unwind below 226 today or in the next days.
Got it. No, that's awesome. I mean, let alone the fact that you're talking about hourly charts, daily charts, monthly charts, right? I mean, I am familiar with the chart pattern you were talking about. I think I had known it as a different name, but no, I mean, the idea of, you talked about confluence where multiple time frames are saying the same thing. It's awesome. It's awesome to see. And I've traded with you for a long time. I've seen you trade, and it's something that is how you find such high levels of consistency, right? Where it's not just one thing, right? It's I'm looking for multiple reasons to get into a trade. It's almost as if you're looking for reasons why I shouldn't get into a trade, because if the odds are against your favor, right? Why would you take the trade? So I mean, it's awesome to see that you have such a detailed process to making that work.
Yeah, as what I was talking before with a trader, so we were sharing ideas. And one of the most important things for a trader is to find that consistency with a systematic process. So reading the price section is good. So knowing when we have, bear trap, bull trap, recognizing the patterns, recognizing, an absorption, a spoofing, a sweep on the tape. So this kind of aspect. But then you have to build your process around, a technical, I would say a technical aspect. Over here, what we have what I have down here is a scanner. I have my statistics. I have my playbook. So I know which patterns to use in this kind of market, which patterns to use in a bullish market. And I can scan with, for example, as a trade for a particular, I would say, statistic that I want to have. Then it's all about waiting for the pattern, waiting for the setup that I want to trade, confirming this with the tape or the flow, risk management, just waiting for my R return and win rate. That's the only thing that we have to do. So this morning, Tesla over here, you can see over here, major dip. And the same time over here in QS, we're pushing this morning. We had a big bounce play from this level of 227.50. And where this went, if we look over here at the previous days, so we can actually do this. Look at this level. We went to touch this level over here. So this was the previous low, okay, the relative low that we had on the 14th of August. So one of the main concepts that I do every single morning when I do my pre-market analysis in front of the room or with traders over here is to essentially start looking for the pre-market high, pre-market low, and then start looking at those key levels of previous day high, previous day low, 2 days ago high or 2 days ago low. One of the main levels that I want is the weekly high and low and also the monthly high and low. And we can see here, the level of demand on the break over here became a level of supply. So we have a shift. In this level of supply, we can align this morning with a very good order flow level of 234. So by keeping multiple time frames together, the same concept you were saying before. So we have a daily, hourly, 50 minutes and a 1 minute, or 5 minutes and 1 minute, you can really see this. Of course, you have to be prepared. So you have to maybe alarms. You have to set your charts in order that you're able to spot this. And then when you have the setup, you simply trade it with focusing on your risk reward for the trade.
No, I really appreciate that, Jay. That's some incredible insight. I have a few questions for you. One of them actually relates to kind of like a question about earlier about how could you confirm a bias. So I'm going to change the script on you a little bit, but yesterday there was a ticker that caught everybody off guard. It was DCTH, right? So really quick, actually before you do that, can you go to your scanner on the bottom at the early scanner? I don't know what settings you have there, but on the early scanner,
setups, very simple settings over here, but we can check it together. So you see, here's what I have. So I have scanner for small caps in this case, 0.5 to $10, change 8%, and I have a reason to have that. Volume 100K, market cap less than 100 million, and institutional less than 30. So I'm looking only for a precise class of small caps. Okay. Of course, this profile layout that I have here is not the only one that I'm using. When I'm trading small caps, I have several scanners. So the good point with Exotrade that I can add the component over here. So I can add over here an extra top list, and I can filter with other customization.
And then could you click on the little clock next to it?
Yes.
And go to yesterday, so we can see what was on that scan yesterday. Right. So top mover yesterday. Caught everybody off guard. Right. Where it's kind of one of those things where it's like you just expect for it to die, especially after that move, like at 10:15, right? Where it was like, usually when we look at those, those are usually the type of moves where we're like, oh, for sure, it just caught a lot of people short without question. How do you then look at a chart like this and find a way to not get trapped on the wrong side?
First of all, start reading the news. Dead cat surges on FDA approval on cancer drug device. You have two things over here, buddy. Can you tell me what they are? Two catalysts.
FDA approval, that's one.
And then?
I don't know. I didn't know the second one.
Cancer. So when you're talking about cancer, something serious like Alzheimer. So what we can see over here, we can see that the catalyst is strong and also FDA approval. So start tracking that kind of setup. And then we have another major over here parameter, which is institutional 30%. If you remember correctly before, my filters, they start tracking this up until 30%. So we are at the limit. The more institutional ownership we have, the more stock will tend to hold the dips and start pushing. But you don't have to get caught off guard because this essentially is not a hard stock to trade. And the reason why is this. There are several levels that we would trade when we have this kind of stocks. My level that over here I want to trade is always that high of the day, because that sets over here once we are holding the J lines over here. You can see this morning we're holding over here the J lines. This was a particular J lines, not the J lines 1, but a J lines. And then when we start reclaiming, you can see that we're holding over here. So there's no point of trading small caps after 10:30 when they hold open level with a decent amount of institutional ownership, in this case 30%. So we have here the open level 9:30, right? So again, like before in the big caps, what it's doing, small caps trap, and that's the reason why you don't short low over here, but you always tend to short high, or these levels over here, or these peaks over here of the pre-market high. The second thing, you start looking at the pattern. So you start looking at this contraction. And it's a rule that I really give to members when they join. You start looking at the open level at 10:30. Are we above or below? And you can see that the price from below reclaims. That's the first alarm. And then you start seeing over here the level that is breaking the tail. And see how perfect these dips are. You start seeing over here now, I don't have the volume, but over here there's a break of the volume. So even if you're short on these levels over here, that's your moment to get out for the trade. And then what happens? Well, you wait for your backside. Where's the backside, buddy? Nothing easier than that. You start looking over here at general rejection. You start thinking this, that's your easy. And after a major trend line break.
I mean, I love that, right? Because I think there's in my trading process over time, when I go back and review my journal, I think there's a few questions that I ask myself that have always been key to me. And it's, would I take that trade again? Right? It's like, I can really judge that. And in this scenario, right, when something should be breaking down and it is not, that's like a huge red flag for anyone, right? If a trade's not matching the expectation that you had, then maybe it's time to size down or to get out, et cetera. But once I saw that rejection and I saw it holding, I was like, whoa, this is a problem. So
it's an error, Chris, that I was doing a long time. I mean, I'm several, I would say, new to small caps. For me, when I started trading was 2017. So it was like 6 years, going for the 7th year. And in the beginning, everybody was trading the VWAP short, everybody. VWAP doesn't really count that much. VWAP is more like now a level where big hands love to trap poor retail traders. They are not skilled. And that's the reason why we're trying to give this knowledge. So it's a rule. It's a rule that I give. 10 o'clock, after that, I'm not really looking to trade unless we have some kind of patterns. If you look over here also, that major break, okay, simply a trend line break over here. Set your trend lines. So you start looking for the backside. And it doesn't mean that, okay, we are over here at, let's put another color. We are over here at this point that I'm going to trade it. I'm going to define this and confirm this together with other multiple setups. Could be order flow, could be the tape. I want to see like seller joining. I don't want to see any kind of big bars. If the volume is low, okay, let me get in. And that's really easy backside of the trade.
That is my favorite trade, by the way.
Exactly.
Like that. Yeah, that is without question. That is without question my favorite trade. That is my go-to play. It sometimes takes a long time to come, but something being so clear like that, that's awesome, Jay. Really appreciate your time today, Jay.
Thank you very much, buddy. So we can give over here a coupon code for the traders that like to join us for the first month. They have a discount, right?
Mm-hmm. That's right. And so if they use your coupon code, right? They JTrader15, I believe.
JTrader15. Mm-hmm. All capital traders. And what we like is one thing. So me and Chris are giving these traders for help you define your strategy. But at the same time, we invite you to try it out over here to trade. I was having before doing with Chris as a trade, different other platforms. And the first thing that I found out with this is that we have everything inside. So you don't need like to have a charting software. You need to have like a scanner. You didn't have to have like a news feed. You have everything in one. So you save your money and you have everything like a professional trader at once.
Yeah, I mean that's we'll go into the platform a lot over in the future, but I mean that's I started trading because I hated tracking data in Excel sheets. I started programming because I hated putting data into spreadsheets. That actually spurred my interest into programming from the beginning. So I mean, from the beginning, it was always related to how can I build a platform that best suited my needs. So I mean, I'm glad to hear that it fits your needs and hopefully for others as well.
All right. So thank you, Chris, for being an awesome host. See you everybody next week, traders. The next time we're going to be live. And thank you very much.
Absolutely. Bye, guys. Thank you.